Are you withholding taxes on your Social Security? Yes, you can do so. Yes, sometimes it's not taxable, but here are 3 times you're going to want to make sure that you're withholding income taxes on your Social Security. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Depending on where your income is when you're drawing Social Security, that will influence whether your Social Security is taxable and how much of it will be taxable. And I'm just going to ballpark it here because it depends on your filing status, whether you're single or married, filing jointly, that sort of thing. But when you add up all of your other income sources, and I'm generalizing here, plus half of your Social Security, if it's above certain thresholds, then some of your Social Security is going to start becoming taxable, okay? You've got to report it on your tax return, but then some of it, once it reaches all of your other income plus half of your Social Security, once it exceeds a certain amount, around $25,000 for single filers, around $33,000, $32,000 for those of you that are married filing joint. Once that number, that formula, it's above that, some of that Social Security starts to be moving over to the taxable line, okay? And the further that income goes, that calculation goes between all of your other income plus half of your Social Security, the higher that goes above those thresholds, the more and more and more of Social Security that becomes taxable until the maximum amount of your Social Security is taxable, which is 85%. And I just have to say this every single time when I'm teaching this. No, the tax on your Social Security is not 85%. It's 85% of your total Social Security is going to be included in your taxable income. For easy math, if your total Social Security is 10 grand for the year and you have the maximum amount of it that's included as taxable income, then 8,500 will be taxable at the federal level. Most states don't tax Social Security. Just depends on your state though. But that's how you determine whether your Social Security is taxable. Hopefully, you've done proactive tax planning and proactive financial planning where you arrive in retirement and you've got plenty of financial resources where you don't need to worry about running out of money and don't need to worry about inflation and don't need to worry about market volatility. Oh, that would be fantastic. And none of your Social Security is taxable. If that's the case, fantastic. That's like the financial holy grail almost, okay? But for the rest of us, you've got to be aware of that calculation so that you can know when is my Social Security going to become taxable. And because that formula, okay, for if you're married filing jointly, all of your income, other income, plus half your Social Security, if it's above $33,000, then some of your Social Security starts coming over as taxable. If it's above $44,000, then you reach that maximum amount where 85% is taxable. And those are approximates, but it's just a small window where you go from none of my Social Security is taxable to the maximum amount is taxable. So you've got to do some careful tax planning and be aware when, well, I've got a unique situation this year or this change, or I'm starting required minimum distribution, or I'm taking more money out of my IRA, I'm doing a Roth conversion, something like that. You need to be aware of when it goes from, well, my Social Security is not really taxable to now all of a sudden it very much is. How your retirement works with that formula is going to influence whether you should always have taxes withheld from your Social Security or never. Now, having taxes withheld on your Social Security, recently did a video about this about a month ago, it's not as easy as you'd think, okay? It's not like when you sign up for Social Security, you're going to fill out a W-4 like you would when you're filling out, when you're working at a new job, where you can say, hey, here's my situation, withhold appropriate amount of taxes. It's almost like the Social Security Administration pretends this isn't taxable. We're not going to bring it up. We're not even going to see if you want to withhold. It's very hard. It's confusing when you're signing up for Social Security to figure out how to withhold taxes. But if you miss it, there's a form, a supplemental income withholding form, where you can then say, nope, I actually do want Social Security withheld and or taxes withheld from my Social Security. You fill that in and you send it on. So what are the scenarios when you should definitely always have income taxes withheld from your Social Security? Well, there's 3 of them in my opinion. And the first one is your Social Security is going to be taxable no matter what. And I know, like, that's a pretty general statement, but here's what I mean. when you look at all of your income plus half your Social Security, if when you do that math, rain or shine, you're going to be above the level, that threshold where your Social Security, the maximum amount of your Social Security is going to be taxable every year, then I would tell you just start withholding taxes on your Social Security. That's likely the simplest way to do it. So here's an example. You've been a teacher all your life and your pension is $33,000 a year. Well, $33,000 plus half your Social Security is likely going to get to the point where you're going to have the maximum amount of your income, your Social Security income, taxable to you. Okay, and therefore just withhold taxes on your Social Security. Another is, well, in order to supplement my Social Security and live the lifestyle that I want, I have to withdraw $5,000 a month out of my IRA. Well, there you go. Okay, then you're going to reach that level where the maximum amount of your Social Security is included as taxable income every year, and you might as well just start withholding the right amount of tax on your Social Security so that each year you're not having to play catch up and worry, am I going to have the right amount withheld? So depending on your circumstance, if you look and say rain or shine, or each year, depending on what happens, I know that I'm going to have enough income coming in where the maximum amount of Social Security will be included as taxable income. If that's you, I would just withhold income taxes on your Social Security. The second, and I already sort of cited this, it's fewer and fewer people have this situation, but if you have a pension, then when you're applying for your pension, you are likely saying, here's how many exemptions I'm doing, blah, 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 and they might not be withholding the right amount for you. It's typical. Our withholding system on income for your wages and for pensions, it is disastrous. It is not helpful at all, and they get it wrong more often than they get it right. It's very common for us to see someone with a pension that's $25,000 a year, and they've got $1,700 withheld for federal taxes on it. My goodness, there's no way. That is not an accurate amount of withholding. So if you've got a pension source of income, and no matter what you do, I want to claim zero exemptions, whatever, they're not going to be withholding the right amount of taxes. That might be a reason. Nope, I'm just going to make sure that I'm withholding a lot on my Social Security to help cover up for the lack of withholdings on my pension. And then the third reason why you should likely have taxes withheld on your Social Security no matter what is if you have other income sources that don't have any taxes withheld. Well, what could that be? Capital gains. If you have a sizable non-tax sheltered account, so a joint account or just a brokerage investment account that typically is going to have capital gains distributions, you might want to withhold from your Social Security because you can't withhold taxes on those capital gain distributions. They just will automatically happen. What about interest? If you have a decent amount of money in a bank or in a money market that's actually paying some sort of interest, if so, give me a call. But if you've got lots of interest coming in from maybe a installment sale or something like that, that's not going to have any tax withholdings on it either. So you're either paying estimates, or a solution could be you're just withholding more on your Social Security. And then finally, dividends. If you've got that non-tax sheltered account, that brokerage account, that investment account, and you've got lots of dividends on that, those dividends are going to land on your tax return whether you're withdrawing those dividends and living on them or not. Even if you're just keeping them in your account, they're going to land on your tax returns. You don't have any tax withholding on those. So those different sources of income that don't have tax withholdings, you may just want to offset that and make sure that you're withholding taxes on your Social Security. So those are three situations when you may want to just have taxes withheld on your Social Security regardless. But the big idea, most people miss this, is when they get to retirement, they think, oh, my taxes are a piece of cake now. No, your tax planning is even more important in retirement than it was during your working career in most scenarios, okay? You have more choice. You have more choice over your different income streams, how they're taxed, and you need to be more proactive because your withholdings aren't just going to be set up automatically by your W-4. This is the opportune time for tax planning. Looking at what areas you have, what choices you have to improve your tax situation, pay the least amount of tax over your lifetime. Part of that is making sure that you've got the right income sources coming from the right types of accounts. But then the second part of tax planning is avoiding surprises. And that game plan That game plan to avoid surprises is, all right, how much tax do I think I'm going to owe, and what should my withholdings, what should be my sources, how should I pay in that tax to make sure I don't owe a big amount when I file my return. Tax planning, that's a job of your certified financial planner, as tax planning is one of the 6 areas of the CFP, okay? Work with your certified financial planner on that. If you don't have a CFP on your team that's doing tax planning, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can call us, you can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.